Hello, this is the TradeSite U.S. stocks and futures market preview for the week beginning Monday, the 14th of September. Sorry, hopeful about the end of the year, I guess. September 2015, ending Friday the 18th. Hope you're having a good trading week. Here's a look at the ES front month futures contract. We're going to start on the monthly time frame here because I want to focus again on the monthly that we were looking at all year long as the market was so slow for several months and a tough environment for some people, especially newbie traders. We got this 13 seeker sell signal. That's the 13 count you can see back in November of last year. And that created that pink line across the top. That's the risk line. So essentially, you get the sell signal, and you can trade up to and not close above that pink risk line, and the sell signal is still in effect. And keep in mind, the last time we got a sell signal on the monthly time frame of the ES, that's the S&P front month futures contract, was actually back in late 1999, right before the rollover. So again, that's the Y2K rollover I'm talking about. So again, this big down month we had at one point in August, and then we've kind of stabilized. If you look at that, again, that's just the beginning of the rollover from the signal. Okay, I would say with decent confidence that unless the market is suddenly super convinced that the Fed, because of this shakeout, and is not going to raise rates for a while, and suddenly the market's going to convince itself that they've scared the Fed into not raising rates and therefore everything's fine and everybody back in the pool. But I don't think that's how that actually plays out. This is still a very powerful sell signal. If you look at it on the monthly time frame, which is where the signal is, it's not on the daily time frame. This has only been 8 or 9 candles since the signal to play out. That's normal. If this was a 5-minute chart, you get the signal and it takes an hour to play out. So this is a monthly chart and it took, 8 months or 9 months to play out and roll over. That's not that big a deal. And what should this signal do? It should mean one of two things. It should mean we either go back to the red line, that's the static trend line down there that you see, which is just under 1400 on the S&P, which is still 500 points back or more. Or at a minimum, on the monthly time frame, we need a new 9-bar green startup phase to complete. And you'll notice that August gave us number 1, which means that we could have 8 months of downside movement. Generally speaking, they don't have to be consecutively down if you understand how the bar counts work for that to occur. But this is a big deal. I think anybody who is trying to drink the Kool-Aid of, oh, the crash is over and everything's good, it's not a crash. There's no crash there. That's not even a pullback. It's not even a retracement. It's a blip. It was a fun blip, and it was driven by the currency situation out of China for the most part. But the idea that that's over, especially at this time of year, September and October are notoriously down periods for the market. It's all related to the federal budget, which renews October 1st. And now we've got talk again of a potential government shutdown over not paying our bills and all the silliness that goes with that. And that doesn't help. That won't be a positive for the market if that gets any traction instead of just paying the bills and moving forward. That will cause the market to go lower. So there's a lot of factors here right now. I think there's certainly, as I would say, 80% chance of lower, 20% chance of higher in the market. That's a pretty big statistic. This is also, if I switch to the daily chart, so you can see the plunge in the middle of August, the bounce back. We've talked about the fact that in that bounce back, we got exactly to the 61.8% fib retracement off that move. So in other words, if I start at the beginning of the collapse and I go to, the bottom of the collapse, basically right here, and slide the chart over for you, you can see that the bounce back, which lasted 2 or 3 days, took us right to that 61.8% fib retracement, and we've been bouncing exactly between the 25 and the 61.8 ever since then. Matter of fact, the high of this week was basically that again. So this is very technical, and the reality is that you've got sort of a bear flag now forming on this chart if you look at it carefully, and I'll take the fibs off of there. But the reality is a break of that sort of trend line that you see that marks the bear flag would be very negative, and then a break of the lows, August 24th lows, would be really negative, and even just to get a close lower than the lowest close of this, which was 1875, might start the ball rolling, and that's only about 75 points lower. So this is not a great pattern for people who are bullish on the market. It would be unusual, barring something jolt economically that I don't know what it would be at this point. The Fed's not going to lower rates. Some kind of jolt that would just shoot this back up. Now, everybody should not panic by what I'm saying here. I'm simply saying your bias should be trading the downside of the market. And if we do start to roll, it's going to be just as exciting as it was in August. There's going to be some good down days. Make sure you're on the right side of that. Those will be the big trading opportunities for traders. Unlike this last Friday, for example, which was the quarterly contract roll. And I have to apologize for not pointing that out a week ago. We're very meticulous about what we point out in these weekly previews, and I absolutely should have pointed out that that was the quarterly contract roll that occurred between Thursday and Friday night, and that almost guarantees that Friday is a waste of time, and it was. And the problem was because Labor Day was so late this year. Usually you get Labor Day and you have that week, and then it's the following week that the contract roll, and I simply was not looking at the calendar properly. So that was one of the things we should have been on guard for this week, was that Thursday was going to be lighter than Wednesday. I think I said Wednesday and Thursday would be the good heavy days of the week. Wednesday was good. Thursday lightened up because you're heading into that contract roll, and then Friday was a waste of time. And that's normal for contract roll. So we are heading now into triple expiration week. Friday is the expiration of stock options, futures quarterly, and commodities and currencies quarterly. And that tends to mean a couple things. It means that either Wednesday or Thursday of this week will be the unraveling move, and because it's a quarterly unraveling, it's got a better chance of being bigger than just a single month one. And then Friday will be the actual expiration, which means a lot of volume and probably not a lot of movement. But at the same time, keep in mind it was options expiration in August where this move was occurring, because that's when the least protection occurs. It was remember, it was Wednesday, Thursday, Friday, that was expiration, and then it was the Monday that we gapped down and recovered a bit. And so, options expiration weeks are when the big players have the least protection when you get to that expiration. So, that's going to be the thing to focus on this week. And there's other things to focus on. We're going to go through the economic numbers, but I want to go back to the charts here before we do that. So that's the ES front month contract. The S&P, by the way, ended up gaining 8 on Friday. We'll take a look at the intraday action that comes with that. Nasdaq 100. This is not a bear flag. This is a little more recovered than the S&P side is, but you can see that you're right against the resistance from the lows of May and July, and that's a wall right now. And it's remember, everybody that was buying stocks and just casually collecting from basically April, May, June, July, and August until the drop just got put underwater. And a lot of people then try to buy more to average down, and you get a bounce back to the exact level where their cost basis is, and now they want to sell some, and that's why you have a hard time getting through here. And if the selling starts to pick up, then the people who bought more get in trouble if they didn't sell any on the bounce, and that's how you get this sort of downside momentum really rolling, and that's what this looks like at the moment anyways. So unless we can really get back above, I'd say get back to about 4,500 on the index, it's still it's a trouble area basically. SOX was about as flat as can be, up less than a point. That's pretty unusual. Biotech's up 46.72, again right against that low of the June, July, August. So that's a wall right here as well. After finding support, even though we pushed under it on that gap down day, the red line, the static trend line, is still solid because we haven't gotten a close under that and then break the lows of that close. So it's actually still in place. That's holding the biotechs up. The VIX retreated 1.17 to 23.20 on Friday. Again, the VIX is about volatility. We talk about the fact that when the VIX gets down in near the 12 range, the low teens, for an extended period of time, the market's kind of boring, and that's not really what we like as traders. And obviously, you can see where it's been. It's been down in that range between 12 and 16. Since March, and that's been a long time for a lack of volatility. If you just look back to December and January and February, it was up near 20, and that's a good number. 20 to 25, even 15 to 25 is a good area for the VIX for good trading environments. Obviously, you have periods every year where it drops down, but for it to have stayed down there that long, that's the reflection of how poor the market was. And then, of course, when you get the VIX spikes to 52 like we had, that's when the real crazy volatility is occurring from sell-offs. And that's what we saw in August. So, right now, even though Friday wasn't exciting, we had 1 or 2 good days this week, 1 or 2 good days the prior week before, because the VIX is holding up. Again, the VIX curling back up is going to be your sign from here that the market's rolling. Here's the trend. Closed at 0.93 on Friday. The 10-day moving average, after dropping off the number from 11 days ago, is 1.60. That's a solid number. Nothing there indicating a sell-off. Nasdaq volume came in weak on Friday, of course, with the contract roll, 1.56 billion shares. It was a weaker week in general on volume than we saw for most of the prior couple of weeks. You saw how high that 10-day moving average of Nasdaq volume got to 2.2 billion shares by the beginning of September. That's after all the time we spent down in the 1.6 area, but now it's back to 1.7 as some of those bigger volume days from the plunge drop off the moving average. Advanced decline ratio on Friday was positive 331, meaning there were 331 more stocks up than down on the Nasdaq and 184 on the New York, so fairly stable. Google gained 4.22 on Friday. Apple gained 1.62. Amazon up $7.20. Amazon has held in like a champ through most of this comparatively. Netflix not quite as well. Notice the red static trend line being support there. Crude oil, another thing we like to follow. Closed the session at 44.63. And you can see the green static trend line that it ran right into and couldn't get through. Those static trend lines are so important for measuring support and resistance. That's the most important level you're going to put on your charts for anything, in my opinion, is the static trend lines. We had a big lesson about that this week on Thursday in the lab on a Goldman Sachs trade where we called out the low and it got within 2 cents of that number because of a static trend line. They're very, very, very critical levels and areas. So now what? Let's take a look at the intra-week action. Now this is a little weird because, remember, we rolled the futures contract from Thursday to Friday. So if you look carefully at this, market was closed Monday. That's that day with the very flat. They opened for a couple hours. There's no volume at all. So that's Monday, Labor Day here in the U.S. Prior to that, you can see last Friday's close and most of last Friday itself. Then you can see Tuesday's trading action. This is in 10-minute candles. The gap up, little pullback, kind of a cup, broke out, and in the afternoon it ran for the last hour a little bit. Then Wednesday gapped up again, pulled back, basically filled the gap and closed on the lows of the session, but still had not gotten back to last Friday's close. So there's a gap remaining down there. Thursday opened flat, rallied, came back down a bit, and then that's the point where now you can see the volume starting to come out of. This is the ES September contract that we've been trading for the last quarter, and you can see it start to weaken up on Thursday, and then look what happens Friday. We come in, and nobody's trading the U5, the September contract anymore, because if I switch the symbols to the Z5, which is the December, you'll still get the same price action plus or minus a couple of points, but you can see that there was no volume on that on Tuesday, still no volume basically on Wednesday. Some of the bigger players started to dip their toe in the water on Thursday, and then all the players were participating for the most part on the December, the Z5 contract on Friday. That's how that works every quarter. And because of that shift and the movement of the money, it resets the technicals, and the bigger players who mostly just trade on pure technicals in the futures market, but also in the stock market because of it, tend to sit out a little bit and sort of let the volume flow into the contract before they start trading again. So I have, after a short week with Labor Day, a lot of times we come back from Labor Day and it's like, okay, maybe Tuesday we shake off the Labor Day barbecues and get back to work by Wednesday. This week I was not prepared for the fact that we had the contract roll. This next week we do have a couple things, but hopefully we're going to start to steadily see just volumes, not jump. We don't need these unless the market crashes or rolls hard, but just start to steadily increase back to the 1.8 billion share days on the NASDAQ, then the 1.9s. That would be good. And so let's get into that. What do we have coming out this week that we need to be aware of as we look at our economic calendar here in the U.S.? It's a full 5-day week. There's no data at all on Monday. Tuesday, retail sales, Empire Manufacturing, industrial production, and capacity utilization. That's all before the bell. So that can maybe get things moving on a Tuesday. Remember, the bigger trading days tend to be Tuesday, Wednesday, Thursday. That's when the institutions play. They tend to sit a little bit on Mondays, get out of the way of the retail players who did their research over the weekend. And then Fridays, of course, a little bit later. Business inventory is 30 minutes into the market. On Wednesday, we've got the CPI. We've got the NAHB housing market index. We've got crude oil inventories, and we've got the net long-term tick flows at the close. That's not a big deal. What's weird about this week is we have a Fed meeting. It's a 2-day, maybe it's a 3-day. I still haven't looked this up, but both Forex Factory and Yahoo are showing that this Fed rate announcement is on Thursday. I can't recall a Thursday Fed meeting. I mean, even if we'd been maybe last week with a Monday holiday, maybe it gets bumped so that the meeting is Wednesday, Thursday. It used to be most Fed announcements and meetings were on Tuesday. Then they started doing a lot of these 2-day meetings where it'd be Tuesday, Wednesday. Now the majority of them are 2-day meetings, Tuesday, Wednesday. For whatever reason, I haven't looked it up yet. This announcement is on Thursday. That's really, if that's correct and it's on both calendars that way, really unfortunate because it just means we're going to be waiting this week for part of that. And I would love to have it on Wednesday so that Thursday could be the big options unraveling move as the big players take out their September options and roll to the Octobers later in the week or Monday of next week. But so anyway, so on Thursday, we've got the weekly initial and continuing jobless claims, housing starts, building permits, current account, Philly Fed 30 minutes in, natty gas an hour in, and then the Fed announcement at 2 p.m. Eastern time. So how does this line up and play out? I mean, so Monday, traditional Monday could have some action, maybe not. Got to keep an eye on the fact that are we going to see a resumption of the downward bias as we head into options expiration. Tuesday, some data, maybe something to get us going, hopefully a little better than Monday. But then Wednesday, we enter a Fed meeting, the day that we want to be focused on the options unravel. Instead of getting the Fed announcement so we can deal with that Wednesday and Thursday, we just start a Fed meeting. And so the market tends to slow down for that, and that's after getting the CPI data in the morning. Thursday, the Fed announcement, you're usually slow until the announcement, and then you've only got 2 hours left. So I don't know, somewhere in there they've got to unravel options and they've got a triple expiration. This is a very strange layout, not a normal layout for a week of options expiration and unravel. And then on Friday, the only number is leading indicators 30 minutes into the market. And of course, I can, likely Friday should be pretty dull. They've already locked all the stocks to where they want them to be for options expiration. But at the same time, if we do start some kind of rollover like last month and there's not as much protection, then it could be a downside move. Very unusual to get a big upside move on the Friday of an expiration, and especially this is a triple expiration. And then the next thing is focused on that federal budget, getting that passed and approved so we don't have to shut down, start dealing with all the consequences to the economy from that. That's 2 weeks off basically at the end of the month. And at that point, too, we're heading into the fourth quarter. Now, this is usually right in here is where we start the better part of the trading year in the next 7-8 months, usually great. A lot of times it's September down, bottom in the middle of October, and then bounce into Christmas and sometimes beyond. So I'm not saying, I don't want anybody to feel like when I talk about the market rolling to the downside here, that this means that, we're going to have some big crash and finish the year in a disaster. It could very well be that a nice, steady 200 or 300 point S&P drop over September and into October, and maybe a month or so from now, a little more than that, bottom out just like we often do, and then bounce back up and end up back here or higher, who knows, for the end of the year. I do think from a trader's perspective, I'd rather see that than just stay sideways on light volume days. That's definitely not what we want to have happen. So I'd rather have us head down and then back up. I have a hard time seeing the market just going up from here significantly. So I think we're going to get a lot more momentum if we go down first. So don't call it wishful thinking, but I do think it's more likely to happen based on the technicals, and I think that'll be better for all of us for what we do. Charts, as usual, brought to you by eSignal12. If you do find these videos useful, please like them on YouTube. It does help us out. If you have any questions, you can email us or tweet us, and whatever you need to do, everything's available on our new website. And of course, we are happy to have you come into our trading lab and talk to us during the week. We have a 2-week free trial. Can help you out for a while. And I think this is a great time of year to be trading the markets, hopefully. And now we got the contract roll out of the way. Just not too thrilled with this layout with the Fed meeting announcement on Thursday in the middle of the triple expiration week, but we'll see what happens. Everybody have a great trading week. We will talk to you on Monday in the lab.